Dear students, I am going to explain bank reconciliation statement. I want to confess that when I was a student, I never learned this topic because it was very difficult. 4 statements I was supposed to by heart, so I always used to leave that chapter. But when I became a teacher, my student, Uday, is a successful IT company director now. He taught me a method, analytical cross method. So I am teaching you this method as a reverse learning. See, I learned from my student, and this method is very simple, and any problem you give me in bank reconciliation statement, you will be able to do that. If same for me also. So I used to think that if I would have learned in my student life, this would have been really successful. So you have to please remember that this is a very simple method, and you cannot see in any book. Only this explanation you can see in the book I have authored, that is Financial Accounting by Dr. Alice Mani. So this I am going to publish it again because it's a lot of demand for that book. So I am going to do that, and this is the module I am going to explain in module 9. So module 9 I have divided it into 4 topics. So the first topic is just the explanation. Just the explanation, what is analytical cross method, what is BRS, what is the need for BRS, and how we are going to do that. So this I am going to explain. First I will explain the theoretical part, and I will do 2 problems on the board. So here, introduction. What is bank reconciliation statement? So you know that a business firm will open bank account. Always they will have a current account. Savings account will be their personal, but current account will be for the business. So this always you have to remember that. See, when the firm will be keeping the 3-column cash book, we have learned. So the 3-column cash book, you have to remember that the firm is maintaining the 3-column cash book. But the bank will give the customer a passbook. See, for the current account, we will get a passbook. So that passbook balance and the cash book balance will be different. The total will be different. Actually, in principle, both should be same. The passbook balance as per the bank account and the cash book balance as per the 3-column cash book should be same, but in practical it will not be the same. So what we can do about that? We are interested to know what is the difference between this passbook balance and the cash book balance. So we are preparing a statement to know this reason. That statement is known as the bank reconciliation statement. Now, if you look at the definition of bank reconciliation statement, you can give it the definition as the statement that is prepared with a view to find out the causes responsible for the difference between the balances of cash book and passbook to reconcile the balance. Now, what are the reasons for the difference? See, one thing, different points are there. First one is a check is issued by the firm, but it's not presented for payment. So the customer will get the check from the firm, but you know that validity of the check is 3 months. Within 3 months, anytime they can present. If they are not in need of immediate cash, they will present it on a later date. Whereas when the check is issued, it's automatically entered in the credit side of the cash book immediately, check issued. So the firm will immediately record, but the bank will get the entry only when the customer will present and when they will collect the amount. So there is a difference. Second one is check is received but not yet collected by the bank. Similarly, the firm, when the check is received, the firm is considering it as cash received, but it is not sent to the bank for collection. The firm has not sent it for collection. Next is bank charges. See, we can give standing instructions to the banks to collect the dividend, to pay the rent, electricity bill, water bill, so many things. So bank, then if you are not maintaining the minimum balance, bank will charge a penalty. So different types of bank charges are there. That will be debited in the passbook. Only when you update the passbook, you will come to know about that. Otherwise, we will not come to know about that. So this entry will not be entered in the cash book. Next is amount paid or debited by the bank as per the standing instructions. See, we can pay of my electricity bill, pay my water bill, pay my rent, transfer this amount to SB account, transfer this amount to FD account, recurring deposit, pay my life insurance premium. So many instructions we can give, the bank will do that. So we will not be recording immediately in the cash book, whereas automatically it will be recorded in the passbook. When the bank is doing that, they will record in the passbook, but this firm will come to know about that only when they will update the passbook. So it will not be recorded in the cash book. Now then it's interest, rent, dividend, etc. collected by the bank. Some of the dividend or rent or interest will be directly credited to the bank. Customers are directly or the clients are directly paying it to the bank account. We will give the bank account and now it's almost everything is online transfer. So they are directly paying it to the bank. So here you have to remember that. So this will be recorded in the bank passbook, whereas it is not recorded in the cash book. Now, continuing with that, check deposited directly by customers or debtors into the firm's account. Now you know that banks will have the cash deposit machine also. So they don't have to come to the firm to make the payment. The firm will tell that directly pay to the bank account and they will share the bank account details. So that is recorded in the passbook, but it's not recorded in the cash book. Next is dishonor of check or bills. Sometimes we will send the checks or bills for collection, but it will be dishonored. So that cash book entry will be there and bank will they will intimate the firm. Then only the corresponding entry will happen in both the books. So this is another reason. Then errors in the books. Overcasting will be there, undercasting will be there. So overcasting may be, say for example, if it's 100 rupees we have to write, either in the passbook or in the cash book. We are writing by mistake as 10 or 110. Overcasting is 100 we were supposed to write, but we are writing 1000, a higher value than that. Or undercasting meaning 100 is the value we are supposed to write, but by mistake we are writing 10. So errors in the books also possible. So these are the reasons for difference in the balances between bank passbook and the cash book. Now format of the 3-column cash book. I'll explain with the help of the board. So the format I am going to explain. We have to see two formats. One is the cash book format and second one is the passbook format. So the cash book format, you have to remember that you know the 3-column cash book where we are receipts we are writing on the debit side. That meaning if you are getting a check from the bank, if you are getting a check from the customer, check received is considered as cash received. So here we will write. If check is issued by the firm, here we will write credit payments. So this side is receipt, this side is payment. Whereas in the passbook, this side is payment and this side is receipt. Just the opposite of that. So here, this is the thing. So this is what analytical cross method. You have to remember two statements. One is cash book and one is passbook. And next you have to remember, so this is receipt side, debit side. This is credit side for payments for cash book. Passbook, it is debit side is payment and credit side is receipts. So this is the analytical cross. So what we are going to do is, you know how we can write the cash book entries. If it's a cash receipt, we will write here. If it's a cash payment, we will write on the debit side, on the credit side. Passbook entries also, you know that if bank is charging some interest, so here we will write because it's a payment. If we are getting some rent collected by the bank, here we will write. So if you know this logic, you can write the bank reconciliation statement. So I'm going to do the problem. First problem. So first problem is, now you have to remember that two signs also you have to remember. See, two methods of doing the problem. One is starting with the cash book balance and arriving at the passbook balance. So cash book balance you are arriving at the passbook balance. Second method is, you are arriving with the passbook balance and then you are changing it, then you are arriving at the cash book balance. So these signs will change. When you are starting with cash book balance to passbook balance, here it is plus and here it is minus. Here it is minus. But when you are writing from passbook to cash book, here it will be minus and here it will be plus. So these are the things you have to remember, and without by hearting any statement, you can do the problems. So I am going to explain the first problem. Prepare bank reconciliation statement as on 31st December 2020. Balance as per cash book balance 2,28,800. You know that cash book balance will be always a debit balance. If you don't have cash, you cannot spend that. So this is the 2,28,800. So this we will put it in a box just to show that this is the balance we are starting with. Next is 3 checks for rupees 22,500, 3,740 and 2,700 were issued in December 2020 but presented for payment in January 2021. So you have to remember that checks issued. So it is already entered in the cash book. So the values are 22,500, 22,500, then 3,740, 3,740 and 2,700. These checks, it's entered in the cash book, but it's not entered in the passbook because it is not collected till January 2021. Next is 2 checks for rupees 23,000 and 3,700 were sent for collection in December 2020. Sent for collection meaning check received is cash received. So here you will write 23,000, 23,000 and 3,700, 3,700. But the problem is, but no collection was made during the year. So that meaning entry is there only in the cash book, corresponding entries are not there in the passbook. So there will be a difference in the cash book balance and the passbook balance. Now bank charged 360 as commission. 360, it's an expense. So here it will come. Now and allowed 2,340 for interest. This is an income, 2,340. This is an income. So you have to remember, now we have to calculate the passbook balance. So how we are going to do? We will start with this balance. What all on this side we will add, what all on this side we will reduce. So how we are going to write? See, 2,28,800 plus 22,500 plus 3,740 plus 2,700 plus 2,340 minus these values, 23,000 plus 3,700 plus 360. So this will be the value. So the value will be, final answer will be 2,33,000, 2,33,20. So this will be the value. Next slide. So 2,33,020 will be the value. So this is very simple. You don't have to by heart any statement. Now see, from cash book we started and we got the passbook balance. Now if you want to do from passbook, you want to get the cash book balance. So this signs will change. This plus sign will become minus. Minus, and this sign will become plus. Just the opposite. Now I am going to explain. 2,33,020. Now minus 22,500 plus 3,740 plus 2,700 plus 2,340 minus 23,000 plus 3,700. So you will plus 360. So you will get the value 2,28,800. So this is how you will do the problem. So the first problem I have explained. So we have learned how you will get from cash book to passbook. Here the sign will be plus, here the sign will be minus. When you are doing from, now you got the passbook balance as 2,33,020. Now from here if you want to do the cash book, signs will be opposite and this is how you will do and you will get the balance. Now one more problem we will do. So problem 2. So that is prepare bank reconciliation statement as on 31st March 2020 from the following details. So cash book balance. So cash book balance showed a balance of 30,000. So 30,000 cash book balance will be always debit balance and this is 30,000. 30,000. 30,000. 30,000 as on 31st December 2020. On comparing the same with the balance of the passbook, it was revealed that a check of rupees 4,000 was issued in the month of December 2020 but not presented to the bank for payment. Check issued meaning here it will come 4,000. 4,000. Now next one you have to remember, firm deposited checks worth 6,000 but the check was not collected by the bank. Check received is cash received. Here it will come 6,000. Now bank allowed 400 as interest. So here it's firm is getting 400 rupees as interest. Next is bank charge 40 as commission. It's an expense. So it's very simple. So here the signs will be, this will be plus from cash book to passbook. This will be plus and this will be minus. So 30,000 30,000 plus 4,000 plus 400 minus 6,000 plus 40. So the balance will be, so the balance value will be 28,360. 28,360. Now this is from cash book, you got the passbook balance. Now if you want to do the same analytical cross, only the signs you have to change. From passbook balance you want to get the cash book balance. 28,360. So this is the value you are starting. So the signs you have to change. So here it is minus and here it will be plus. So 28,360 plus these values 6,000 plus 40 minus 4,000 plus 400. So the value will be 30,000. So this is the first method I want to explain with the two problems. Just the simple problems, how we will do the calculation with the bank reconciliation statement. So that is happy learning, and it's a very simple method and you can learn this, and it's a very simple, no book has explained that. So this method you please follow that and you can score full marks for the paper. Thank you.